Hey everyone, welcome back to Corporate Decoder, the place where we decode the confusing language of big business. And today we're looking at Noodles Company. Looks like they're shaking things up and considering some big changes. Are they about to sell off the whole restaurant chain or just looking for a financial tune-up? Let's dive into this SEC filing to find out what's really going on. Before we get into the nitty-gritty, if you love getting easy to understand insights from these dense corporate documents, make sure to hit that subscribe button. And hey, join our Discord community for even more discussions. The link is in the description. So what we have here is a current report filed by Noodles Company. These reports are like a company's diary telling us what's happening right now. This report is dated September 3rd, 2025 and specifically points to events that also happened on that day. This particular form is an 8K, which is used to announce major events that shareholders should know about immediately. Think of it as a company's breaking news announcement. We can see here that Noodles Company's Class A common stock is traded on the Nasdaq Global Select Market under the ticker symbol NDLS. This is where everyday investors can buy and sell shares of the company. Now this is where it gets interesting. Under item A201, other events, Noodles Company is announcing that they have started looking into what they call strategic alternatives. Essentially, they're exploring all their options to make their shareholders more money. This laundry list of possibilities includes refinancing their current debts, which is like rearranging how they pay back their loans to get better terms. It also a strategic move that could bump up the value for their investors. Could mean a complete buyout or selling off certain parts of their operations. They are keeping their options open for any kind of financial or strategic move that could bump up the value for their investors. This could mean a complete buyout or selling off certain parts of their operations. They are keeping their options open for any kind of financial or strategic move that could bump up the value for their investors. And as is standard practice, they've included their press release announcing this review as an exhibit. This press release is the official announcement of this major review. And this last exhibit is a technical file that makes the information in the report easier for computers to read and analyze, which is pretty cool when you think about it. Looking at the sign-off, we see Mike Hines, the Chief Financial Officer, confirming that this report is accurate. Now, what does all this really mean for Noodles Company? Companies don't usually signal a review of strategic alternatives unless there's significant pressure or opportunity. Refinancing debt suggests they might be looking for a better way to manage their financial obligations, perhaps to free up cash or lower interest payments. Refranchising or selling parts of the business could mean they want to shed some of the burdens of direct ownership and operations, moving towards a more asset-light model where they collect royalties and fees instead of dealing with day-to-day restaurant management. The big question is, why now? Is the company facing financial headwinds that necessitate such a drastic review, or is it proactively seeking to unlock untapped value? Without specific financial tables in this particular filing, it's hard to pinpoint exact numbers driving this decision. However, the very act of exploring a sale or significant restructuring often signals a belief from management that the current market valuation doesn't reflect the company's true worth or potential. They might feel that a new owner or a different business structure could unlock that value. This move by Noodles Company puts it in a category with other restaurant chains that have recently been acquired or are rumored to be exploring sale options. The restaurant industry is highly competitive and success often hinges on adapting quickly to changing consumer tastes, managing costs effectively, and maintaining a strong brand presence. If Noodles Company has been struggling with profitability, same-store sales growth, or managing its debt burden, exploring these strategic alternatives would be a logical step to address those challenges and potentially improve shareholder returns. It's a bit like a homeowner deciding whether to renovate their house, sell it as is, or sell it to a developer who might have bigger plans. They're weighing the immediate cash they could get versus the long-term potential. For investors, this news can be a double-edged sword. On one hand, a sale could mean a premium price for their shares. On the other hand, it signals that the current path might not be delivering the desired results and their uncertainty about the company's future as an independent entity. This is a significant development for Noodles Company. They are essentially opening the door to major changes that could redefine the company's future. Investors will be watching very closely to see which path they choose and what this means for the brand and its employees. Alright, that's our quick decode of what Noodles & Company is up to. What's your take on this strategic review? Do you think they'll sell, refranchise, or just shuffle their debt around? Let me know your thoughts in the comments below. If you found this breakdown helpful, please give it a thumbs up. It really supports the channel. And don't forget to subscribe for more insights like this and join our Discord community linked in the description for more discussion. Thanks for watching, and I'll see you in the next one.